Yeah, if you'd asked me about Bitcoin in February of 2020, I would have said, what? No, it's not for me. I don't get it. If you'd asked me what I thought about business in April of 2020, I would have said, this is just the scariest thing I've ever seen in my career. Main Street shut down and Wall Street's already recovered and the K-shaped recovery. It's just very odd. By the time we got to the end of the second quarter, what we knew was this. Our revenue wasn't going away. Our business value proposition was better than ever. We were going to generate 4 times as much cash flow because all of our marketing, sales, and services activities dematerialized. Travel and expenses dropped by 98%. And we started Zooming everywhere. We started uploading videos to websites. So we had all this cash coming. We had a block of half a billion dollars of cash sitting there. And we got dragged into macroeconomics and we realized that it was worthless and the investors didn't value it. We had a problem and we started looking for a solution. And I would say, Tom, the paradigm shift here is twofold. The first paradigm shift is for the first time in 30 years, people in the Western world are living in environments where the currency is weakening more than 7% a year. It's weakening at 15 to 20% a year. That's the first paradigm shift because that changes how you discount bonds, how you discount value stocks, how you discount commercial real estate, and you got to think different. And the second paradigm shift is Bitcoin's the first digital monetary network in the history of the human race. We never in 5,000 years could make money work on a computer network. And it wasn't clear it was going to work when it was $1 billion. But by the time we got to June, it was $200 billion. And, you guys follow digital networks, Facebook, Amazon, Apple, Google. Every good idea for the past decade has been a digital network. And when they get to 200 billion in market cap, they're pretty hard to stop. So our conclusion was, this is like Facebook for money or YouTube for money. And we jumped on it. Today, it's $1 trillion digital network. It's the fastest growth to $1 trillion of any network in the history of the world. It took 12 years. Google took 22 years. Amazon took 24 years. Apple took 42 years. Microsoft took 44 years. Those are the only firms that have ever done it. Bitcoin has done it. And so the paradigm shift is digital monetary network, a solution to everybody's problem, and COVID lockdowns, everybody's got a problem. You put those two things together, you have to think different. And that's why we did what we did.
So why would governments allow that to happen? What do you see as the risk on the regulatory side?
Well, the most important thing to know is that although people call it a cryptocurrency, it's not, it's crypto asset. Money has two flavors. It's got the medium of exchange currency element, and it's got the store of value asset element. Bitcoin is a great store of value, digital gold. What's the addressable market? $100 to $200 trillion. Half of all the stuff that floats around the system is store of value. People just want to keep their money forever. The other aspect of currency is I want to buy a cup of coffee 1 billion times a day. People are going to do that with dollars and yuan and yen and euros and Chinese currency. They're going to do it on Apple Pay and Visa and MasterCard and Square and Ant and every other regulated payment rail. The government, as long as it functions in China, the US, or Europe, is going to control the currency. And they've given it tax treatment. When I give you $1 million or 100,000 and you give it back to me a year later, there's no capital gain tax on it. It's not a taxable event. It makes sense to use dollars as currency. On the other hand, Bitcoin is property. It's been legitimized as property by the IRS, by the SEC, by the OCC. It's not going away. It's not going to be currency in the US. It's not fast enough, and the tax treatment is hostile. It is going to be property to the extent that people buy it from regulated custodians subject to AML KYC regulations and banks like Morgan Stanley, where they're buying it now, or from players like Fidelity. The government's just going to make sure that it has the same AML KYC regs and clarity that gold or silver or stocks or bonds or any other derivative instrument would have. It's not threatening to a government if I'm swapping out my gold for Bitcoin. It's threatening to the government if you can move $1 billion to a private wallet in sub-Saharan Africa without KYC AML. So you can expect that they'll have regs around the ladder, and that's totally fine. And as they clarify those even more, it's just going to be bullish for the asset class, because that's the green light for every insurance company and endowment to buy 100x more.
What is your overall perspective on, let's say, Bitcoin anywhere 5 to 10 years out in terms of the...
My view is Bitcoin is the apex property of the human race, which means that it's the last thing you will sell. You know, if you had a block of Manhattan, you would hold it a long time because you thought Manhattan's always going to be valuable, but Bitcoin's better than Manhattan. And so it's the ultimate long duration asset, or in other words, an institutional grade treasury reserve asset. You ought to buy it and hold it. And if you ever need cash, just borrow against it, just finance it. The native yield of Bitcoin's been 200% a year for a decade. You could borrow money and pay 5 or 10% interest and borrow infinitely forever and have your debt to equity ratio fall, right? As long as that trend continues. And it's continued for 10 years until this year when it went to 400% appreciation. And that's because Bitcoin's a fire in cyberspace, a monetary fire. How do you feed a monetary fire? With money. And what happened this year? Well, two things. The cost of holding US dollars tripled. And so that's the macroeconomic driver. And the other thing that happened is that Bitcoin burned into the public markets. And look at companies like mine. We went to the market, we borrowed $1 billion at 0% interest. So we bought Bitcoin yielding more than 200% interest. How many times would you actually trade $1 billion at zero for 200% yield?
What do you think will play out in terms of the level of volatility of Bitcoin's price?
It's falling already. I think the people that lived the last decade, the first decade of Bitcoin, have been scarred by their experiences because they had a very volatile first decade. But I think that those are misleading because the system has evolved. Institutions have come into the marketplace. And since March of 2020, it's a totally different asset class. If you look at the chart since March, it goes up 50%, down 25%, up 50, retraces 20, up 60, retraces 25, 30, up 50, retraces 25. And so it's actually simply growing from 4,000 to 60,000